Welcome to the Friday, April 13th, 2012 version of Market Plus here at our Market to Market website. Thanks for joining us. Tell your friends and neighbors, and of course, remind your local public television programmer if they're not carrying Market to Market, they should, so it's available to our larger general audience. Well, thank you for finding us here at our internet site. With us this week on the show and here on Market Plus, one of our regular market analysts, a longtime market analyst, Tom Fitzenmeyer. Tom, a couple of things we didn't get to on the show, and we've had some great, and we appreciate your tweets. We appreciate all that, the Facebook and all the other comments that we get, so we can pass these along and pass the questions along directly to our guests, so it'll make it kind of three-dimensional. Amanda sends in a note, and we didn't get a chance to get to this on the show, and I really wanted to. What's your opinion on gold? Has it done staying? Is the gold thing over? What do you think?
I think gold's going to pull back a little bit. I heard it said this morning that if one of the big problems that we have in the U.S. is debt, which I don't think there's any discussion about. Yeah, nobody's arguing about that. That one of the only ways to get our way out of that, sort of the chemotherapy to kill that cancer, is inflation. And if you believe that, and you believe we have to inflate our way out of it, then that's probably going to be friendly to the gold market. And I'm not saying we aren't going to pull back as much as, you know, 1,600, maybe 1,500 on this pullback. Longer term, I think you have to have a piece of gold in your portfolio to help guard against some of that inflation.
All right, that's a good point. Of course, all stuff is going to be good in inflation too. So, are you friendly to farmland, as for instance, Tom?
Absolutely. Absolutely, I agree with your first statement. Whether I'm friendly to farmland, and as much as it's gone up, I'd guess the rate of growth, if there's going to be continued growth, is going to slow up quite a bit. Part of that is driven by profitability, and I'm not sure with expenses going up and commodity prices sort of stabilizing here, I'm not sure that profitability is going to be there to push land prices higher. But certainly, you would think land would participate in that.
It was interesting this last week. The Federal Reserve has been making comments all around saying, "Oh, this economy's better." They're strengthening. Maybe they'll cool some of the quantitative easing that's continued. It's not QE2, but just the continuous easing that they've had, making dollars real. Maybe they're signaling us that maybe that's going to change.
Yeah, I think that's part of the reason you saw the market sell off this week in terms of equity markets and some of the outside markets, as I like to call them, because there's some uneasiness about how the Fed really is going to handle this thing going forward. So yeah, there's no question about it.
We spent a lot of time on the show talking about corn, and I don't want to chew up a lot of time in Market Plus talking about it because we talked about so much in the show, but Jason over in Murrayville, Illinois, a good town over there, he asks how low can new crop corn go before a summer weather scare? You were talking about that. We talked about the big money, the funds are in corn, and you mentioned their big position in soybeans now. Could a big acreage number perhaps or something be a catalyst to put this corn thing lower before we hit the weather market?
I think we're going to have a big acreage number. I think we're going to get it planted fast. I think we're going to have 80% of it plus planted by the last week of April, assuming the rain kind of straightens out after this weekend. So yeah, I think you're going to produce a lot of corn. I think unless there's a problem in the Northwest, I think you have a good shot of moving corn futures back into that 450, 425 range this summer. Now, if after the end of June things start to heat up and there's problems, maybe you can get a bounce off that. But I think we're in for some fairly rough going here for a while.
All right, so more corn. You don't think we're going to see much of an acreage shift?
There might be some. As I talk to guys in the northwestern production areas, they're a little concerned about the dry weather, the effects that's having on corn. New crop beans have rallied enough that I think you're going to see a little switching maybe back to beans. But number one, a lot of people have made fertilizer commitments. Number two, people don't historically tend to shift that many acres. So, and number three, with this rapid planting progress, when people start planting corn, they just keep planting corn.
Yeah,
so
push comes to shove, I'm going to go corn every time.
Yeah. Now there might be an increase in bean acres from other areas. There were a couple million acres that were sort of not really accounted for in that acreage number,
right.
That could attract some beans. There's going to be some alfalfa torn up after the first cutting's taken off and some beans planted. So there's going to be some of that beans will pick up. I don't see corn losing a lot of ground there, though.
All right. Your advice was Make corn sales, make whole crop corn sales, these are attractive prices. Make whole crop soybean sales, and at 552 or better, you want to sell some new crop corn.
Right.
You also want to make sales on new crop beans.
Yeah, for 1385 to 1395, just under that old high is where we've got our orders tucked in. Now we dropped 30 cents or so away from that at the end of this week, but I think you'll get some weather concerns or something that'll give us a little bounce to let us do that. Now, if you don't like selling, just flat out selling and making that commitment, find yourself a good option strategy and do it that way and leave yourself some upside if you want to.
Wheat, the laggard, 680, you'd make sales.
Yeah, absolutely.
Tom Fitzmyer, as usual, appreciate you being on the show and, of course, being with us right here on Market Plus. That's going to wrap up Market Plus for this week. Thank all of you for joining us. Again, tell your friends and neighbors, have them join us here. The more the merrier is our motto. And, of course, contact your local public television programmer so you can see our entire show live as we air it and deliver it to your local public television station. Just call your programmer. You make a difference when it comes to programming on public television. So take advantage of it and make a phone call today. For all of us here at Market to Market, I'm Mark Pearson. Thanks for joining us. Have a great week.